forgot to record. All right. So one of the things that I give most of my time to these days is following the markets. Um, not with the intention to following the markets, not with the intention to put on a trade, just to understand, just to be in sync with the markets, be in its rhythm by understanding a simple concept of how the market moves. Market moves in this manner. There's an impulse and there's a correction, which we call fair value, an impulse again, a correction, and an impulse again. Right. So when the market was forming structures like this down here, I'm not really worried because still paying attention to that area. So sometimes it does happen that the market doesn't touch your point of interest. Maybe it does something like this. Let me put it here. Does something like this. At this point, you are now worried that this trade might leave without you when you've been paying attention to it for 3 full weeks, only to find that the market will still mitigate this area. And the way the market should mitigate your area shouldn't be just like this. If the market does something like this or goes into the 10% of the zone, then know that the market still has to come inside. The best mitigation is for price to go at least 50% into the zone. Then you can anticipate a further move up. Um, my mentor used to place his orders at 50% like this. I prefer putting it at the beginning of the range. When I back tested, that worked for me. At 50%, I would do very, very good analysis and the market would leave without me. Right. Give me a thumbs up or a yes if you are following. And suggest those pairs on the comment section that you'd love us to look at. Since we were looking at the dollar, let's look at cable, the pound versus the US dollar. Let's look at cable. So since we were anticipating or the dollar is bearish, sorry. All right. Oh, Euro JPY. It's one of the pairs that is in my watch list. We will have a look at that as well. So since we're anticipating the dollar to be bearish, or that's the bias that we got when we were doing our breakdown on the dollar, GBP USD has to be bullish. So let's see if we can find or if the market even agree with that. Yep, we're going to look at the euro yen as well. So if you have a pair that you'd like us to go over, put it in the comments. So I used to when I'm looking at the markets, I used to when I'm trying to find direction, I used to do high high, high low, high high, high low, high high. Trust me, it still works. It's just that um you get to miss out on a lot of trades and you're not trading current market activity because you basically prices move by what's happening now. How many buyers versus the sellers are available at this price at this particular time of the market. So sometimes going too far back won't help you. Hence, the way that we find direction is by looking at the current candlestick of the higher time frames. And our higher time frames are the daily, weekly, and monthly time frame. So when we look at these three time frames, what we're trying to establish is the direction of the market, and that helps us filter which side are we going to take. Are we going to be buyers or are we going to be sellers? Now, the most important thing, or the best thing you can do for yourself, it is to follow order flow or market direction in simple terms. All right. So even here, candlesticks tell a story. I always say that. You look at this candlestick. This is last month, opened here, made a high, came all the way down here for a low and closed at 1.23 900. And then the next candle, which is the current month, February, it opens down here. So there was a gap here. There was a gap here, and that gap was caused by sellers. It means there were more sellers at some point. But now all of the sellers have been absorbed by these buyers. So that is a sign of strong bullishness. Okay. There's many ways to find market direction. So this one works well for me. I hope it works for you as well. Right. Oh, apologies. So yeah, we were bullish on a monthly, so we're bullish on a daily, on a weekly as well. Let's see the daily. So the most ideal situation is for all three time frames to be telling us the same thing. So we're seeing some bullishness as well. So what I normally do is I go 5 candles back. One, two, three, four, five. Okay. And then I look at a candlestick that has a big body that represents or that is in line with the higher time frames. So I'm sure we can all agree on this one, even though there is a huge imbalance below as well. So this particular area is an area of interest. But what is closest to current market price now is that. You can't see my screen. Please let me know if you can see my screen now. Just a thumbs up or a yes. Back again. I think there was a comment. Can you guys see my screen now? If you can see my screen, please type yes or just a thumbs up. Perfect. Zepi is asking what happened to Sunday sessions. I had terrible weather that day. I really did want to have those. We can do them this Sunday. It seems like the interest is growing because I had put out a poll to see. All right, fantastic. Now everyone can see. I had put out a poll to see how many people would be interested in that. So the numbers are going up. That is that is nice. Okay. So this is the candlestick that we need to be looking at. So now let's move on to lower time frames. Let's look at lower time frames for hour to find um, an area of imbalance around that level that will suggest that we can buy from. I can clearly spot it. So this is your whole demand level that you can buy from. So should you be interested in buying GBP I think this, man, it lines up very nicely correlation wise. So remember, the dollar looked bearish, so which meant we need to be looking for selling opportunities on USD JPY, and we found a setup like that, which also meant that we need to be looking at the going on and off at this. Yeah, that's my Wi-Fi, ladies and gentlemen. On and off, on and off, on and off. So yeah, there is my area. So I highlight it like that. And planning for this trade, obvious entry at the beginning of the demand level. Stop losses right below, about 28 pips. Target, we can target first this high. 1:3, it's also a good risk reward ratio. But I always take 1:5. And I don't force this because it always has to be in agreement with the momentum of the trend and higher time frames, let me say profit regions. Let me show you. Um, to find my target profit for this trade, I would go to a higher time frame. Let's start with the nearest one, which is daily, to see where it will be best to. It has never been this low, this Wi-Fi. Right. So I would target these highs. I know the market has a very high chance of breaking these highs. Why? Because we still have more areas of imbalance above that, and this is fair value. So maybe I can target these highs. So there you go. Now I have a 1:7 risk reward. Right. This is also a potential area, but what's nearest is this one right here. Or if you can target a clear supply area, it is this drop, base, drop, drop, base, drop. This area here. So you can also target that. That would be a nice target profit. And voila, from this trade setup, you now get a 1:10. If you're risking 1,000 rands, there's a potential 10,000 rands that could be made from this. This is how you need to be thinking about risk. If you're risking 200 rands, you can make 2,000 rands from this trade. But you have to be patient, waiting for it to play out to the T. And let's look at it on a 1 hour time frame. Might look much more nicer. Right, there we go. And right above, you can tell that this area right here is the value price. So buying GBP USD, selling USD JPY. The USD JPY has to come some up here, and then we're going to sell. There we go. So that's the setup on USD JPY. What else can we look at? Let's look at crude oil. So that we have a good balance. Crude oil futures. So we analyze the market the same way. Whether we're looking at commodities, the equities market, it's because we believe in the concept of buyers and sellers because that's what causes price to move anyways. So bearish on a monthly, sorry, on crude oil. So we're trying to establish direction. Bullish on a weekly, and bearish on a daily. So we have a contradiction here. We are bearish on a monthly, bullish on a weekly, and bearish on a daily. So what do you do when you have a scenario like this? You pick the time frame of you pick the direction of the highest time frame, this being the monthly. So going back 5 candles back, 1, 2, 3, 4, 5. Here's big brother here. Here's big brother in line with the monthly time frame. So this is more bearish. So somewhere here, we need to be looking for selling opportunities on crude oil. Let's go down to a lower time frame, 4 hour, to confirm that. So we can adjust our area, narrow it down. By so doing, we are reducing the risk or the distance from entry to stop loss, so that we can get a nice risk reward ratio from this trade. We are not forcing things. We're not forcing things, because sometimes the trade setup would say you need to be risking 30 pips, but because you want to get a very nice risk reward ratio, right? You then force things to go as little as 15 pips. And you find that the market taps into your area, hits your stop loss, and start moving the right direction. So there you go. Simple setup. I like putting this just 2 lines in my chart. It just makes life easy. Here's the initial target profit. Repeat on this analysis. All right. Once again, I'm gonna start from the monthly. So when we are going through the process of establishing direction, which is looking at monthly high, looking at higher time frames, which is the daily, weekly, and monthly time frame. The most ideal situation there is for all 3 time frames to be in agreement or tell you the same thing, all bearish or all bullish. But sometimes you find that the monthly is bullish and the weekly is is bearish, and the daily is bullish. So what do you do then? You then take the direction of the highest time frame and ignore the others, which means you'll go with the monthly. That means you'll be looking for buying opportunities only. And why do we do that? We want to filter, because when you look at this chart before analysis, both selling and buying opportunities are present. But which one is of the highest probability now? It is the one that is in line with the higher time frame. All right. So monthly time frame, we're bearish. So coming to the weekly time frame, you can see it is bullish, as much as it looks like a pin bar or an inverted hammer. And then the current day is bearish. Okay. So we follow the higher time frame. Yes, there is some correlation between oil and the US dollar. Sometimes if it's the US oil, it definitely would sometimes move in the same direction. But with commodities like oil, there's always a lot of factors affecting it, like geopolitics. A lot. It gets affected by that a lot, especially with wars and instabilities going on in the areas where we get most of this commodity, which is the Middle East mostly. So yeah, when there's conflicts there. So then what direction we need to take, or what um do we need to be a buyer or a seller? We need to be a seller. So where should we look for selling opportunities? Then I normally go 5 candles back, 1, 2, 3, 4, 5, and I look for the biggest candlestick, but not just biggest, one that is in line with the higher time frame. All right. Then from here, I'm gonna go to a 4 hour, but I know that this is the area that I've pointed, this is where I'm supposed to be looking for the selling opportunity, right? And then I go down further, down with the time frames, but I don't go below 1 hour. So what I'm doing now is I'm trying to find the best, or to narrow this supply area of mine, in order for me to get a very good risk reward ratio, just to reduce the risk like that. But you don't have to force these things, right? If the market just says you have to be risking 30 pips, then that's it. Don't try to squeeze 10 pips so that you can get a 1:20 risk reward ratio. Okay. So entries here at about 72 $60 per barrel, and stop loss is about $73.15, and you target that. Look at that. It's one of my nice trades, a 1:5. It's very simple. We don't complicate things. And all you have to do now is just follow price action. As you see the market doing its movement, you're just waiting, and then boom. Someone once questioned, why can't we take a buy here when it's going up? Well, you can, but just know that there are more chances of you losing because you are against the main direction of the trend. Right. We have less than 1 minute. Kutela said, is there any correlation between the US dollar and oil? Okay. Pin says, thanks, Max. I'm answered. Oh, all right. I hope you were answered as well, Kutala. Yes, there's correlation between oil and the dollar, but it's just that oil is one of the commodities that's affected by a lot. Just like gold, the dollar might be bullish, and then you find that gold is bullish as well when that's not supposed to happen, only to find that it's driven by politics and economics. See you tomorrow on the London session, ladies and gentlemen. Have a great trading day. Cheers.